So within 30 days, I was able to withdraw over 20,000 US dollars from one single prop firm. And in today's video, I'm going to show you a few trades that I took during that period that enabled me to do so. All of these trades were also sent into my VIP group, which you can join by clicking the link in the description below. And before we jump into the breakdowns, make sure you hit the subscribe button so you don't miss any more content. I hope you enjoyed the video, guys. Let's get straight into it. So first of all, here we are on my Funding Pips dashboard. So the prop firm that it was with was Funding Pips. Good experience with them so far. First payout I got was $4,200. That was on April the 17th. Second payout was $6,300. That was on the May 2nd. And then the third payout, which I got recently, was on May the 13th, and that was for $11,300. So the first two payouts came quite quickly. I say they came within 5 working days. So no problems there at all. The third one, which was the biggest one, had a little bit of trouble with the payout in terms of it was quite delayed. I actually had to DM the Funding Pips Instagram page to ask them where the payout was because it was taking longer than usual. But they managed to sort it out, and then straight away they got back to me and they said it will be processed, and then within the next 24 hours it got processed. I'll actually put screenshots right now of each payout hitting my bank account as well, just so you guys know that I did actually get the withdrawals. So that's great. And also, these are the certificates if you guys did want to actually scan them and make sure that it is actually legit and I'm not just saying it. So that's my name as well, obviously. And then the last one here for 4K. So yeah, good experience so far. One thing I do want to say though, guys, is yes, I'm getting these payouts, which is great, but don't think that I'm not failing challenges as well. Don't think this is all just straight profit. I do fail challenges, a couple throughout the month as well. I'm obviously trying to get as much capital as possible. As all traders do, we all have losing weeks, losing days, losing periods. So there are stages where I will lose funded accounts. I'll get to stage 2, I'll fail it. I might even end up blowing this account eventually, but over a long period of time, I always kind of end up in the positive because of just long-term consistency. But yeah, just to kind of put it out there for anyone watching this, full transparency, I don't just constantly make profits. It's a process of failing and also succeeding and ensuring that your successes are bigger than the failures over a long period of time. But anyway, that's the Funding Pips dashboard. Let me now go into the breakdowns on TradingView of some of the trades that I took during this period. Right guys, so the first trade I'm going to be talking about is on EURJPY. It was on the 7th of May. This is the 5-minute time frame. It was 2 buy positions, which totaled to around 7.5 risk to reward ratio. So what does that mean? If you risked 1%, you would have gained 7.5%. If you risked 2%, you would have gained around 15%, something like that. So into the breakdown, this is the 5-minute time frame. Just going to be focusing on this for this specific entry. What I'm waiting for is a shift in market structure, because as you can see, this whole market structure that we're seeing right here is bearish right now. So I don't want to be looking for buy positions because price is bearish, and there's many traps along the way that might cause traders to want to buy the market. As you can see, obviously price here from this left hand side of the screen over here is bullish. We are uptrending, we're forming higher highs and higher lows. And what people would tend to try and do is, as price breaks through this level of resistance here, as you can see, there would be people who would be thinking that this level of resistance would be used as support over here, and there would be people buying the market there. However, what they're ignoring is the fact that price is still downtrending. We are still in bearish market structure. When I'm looking for a buy position, I want to be looking at the market from both a buyer's and a seller's perspective. So from a seller's perspective, if I was someone selling the market, I would be wanting to continue with this trend to the downside. If I'm someone who wants to be buying the market, I want to see market structure broken first, with a higher high being formed, before I look for my buy position. So we're just being patient. We're allowing price to form. We're allowing the market to do its thing until we get that evidence of a break in market structure. There's another trap that has happened here. Price, rather than pulling back to this level of previous resistance as support, we actually pulled back to this level here, this previous level of support within the market. So what is happening here, as you can see, this is where this initial impulse was generated from, okay? This move in the market. So as we're pulling back to this zone, me personally, I believe there would be a lot of people who would be looking to enter buy positions off that small rejection that we can see right there, with their stops just below this area of support that we have, and then trying to target back to the high point. But once again, price has smashed through the downside, and again, by being impatient and not waiting for that shift in market structure before you enter buy positions would have caused you to be stopped out. So just to recap, when I'm looking for buy positions, I want to see price forming higher highs followed by higher lows. If I'm looking for sell positions, obviously I want to be looking for lower lows followed by lower highs. So anyway, for a final time, price, in my opinion, had this liquidity grab all the way back down to the lowest low that in this specific period that I see on my screen here. Price is pushed back down to this low, nice strong candle followed by a nice rejection. Okay, that for me is a liquidity grab, back grabbing orders from where the initial bullish move had started from. Okay, so we've had that move now, and notice what I'm not doing is I'm not just looking to buy the low. And many of you are thinking, well, why didn't you buy the low? And it's all good saying it now. It's all good saying that, okay, yes, I should have bought the low there, but there was also a low point here, there was a low point here, there was a low point here. You know, you would have lost every single time. And in my opinion, it's good to just wait for that shift in market structure to increase your probability. Once you see that shift in market structure, at least then you know that there's nothing stopping you, there's no reason to not be entering buy positions. Okay, so this is the 5-minute time frame. We're seeing this rejection. I'm now dropping down to the lower time frame, which in this case is the 1 minute. Okay, this is a very, very low time frame trade that I took it on. Now we can see even more market structure on the 1 minute time frame. Okay, we can actually see this movement where we are forming these lower lows followed by lower highs within the market, and price is still technically bearish. Okay, we can see price is just constantly moving to the downside, and then with this being our most recent lower high point, that is the structure I wanted to see broken to tell me that price is back in bullish market structure. Okay, because as you can see, price is still technically bearish. Let me get rid of all this. So once again, this is the structure I need to see broken before I look for buy positions. Let's play this out, see what happened. So now I am happy. I want to be looking for buy positions. We jump up to the 5-minute time frame. We're clearly bullish again. Price is massively bullish. So I want to be trying to jump in and trying to find an area where I can be looking for buy positions. So let's keep it going. Notice how we have this area here. So at this given point, guys, I'm looking for price to pull back and form a higher low to then take an entry back up to the upside. That is what I'm looking for. Okay, we've had that breakout now. I am looking for a higher low to form, followed by a rejection to then continue with price action and bullish market structure. So we'll see what happens. So there we go. Price pulls back, retest this low in the market here. As we get that switch in momentum, I then pull the trigger. I entered at 166.057, stops just below the low point. And then where am I targeting? Jump up to the 5-minute time frame. I'm targeting back to this high point that we have over here. Notice as well, what I'm not doing is I'm not targeting the very, very top of this wick, okay, the very, very top of the high. Because what you'll notice is I always like to target just below, or that's where I'm looking to get out of the market, because as price approaches a level of resistance and you're in a buy position, you'll notice as price gets towards that level of resistance, price starts to slow down, starts to get choppy, starts to get wicks. And, you know, it's just an emotional battle that you don't want to be in, because what's happening is price is slowing down because at this resistance level, buyers are closing their positions, sellers are trying to get into the market, and the market's leveling out. There's more equilibrium. So that's why it gets more choppy. So that's why I target just below to get out of the market. Saves myself the hassle and the stress. I just want to get out of the market. So back down to the 1 minute time frame now. I'm in this trade. How do I actually manage the position? So now we've had this strong impulsive move to the upside, and we're probably at around a 1-to-1. We've broken through the most recent high point here. And even if I drag this over there, you can see we've strongly broken through it. At this point, I have trailed my stops to break even. Okay, so I protected my capital. If price was to pull back, I get out at break even. I'm risk free on this trade technically. Okay, so price has made that move. Now, if you know me, you know how I trade. I don't just set my trade and forget it. I manage it. In my opinion, what happens before you enter the trade is not as important as how you manage the trade after you're in it. So I like to manage the position, to trail my stops, and potentially catch a scale in position, which is just a secondary position along the way, which I did do, which we'll get onto, where I look to maximize on my profits whilst also limiting my risk that is on the table. So let's keep this going. Price is moving up. Notice how we are now forming a new higher low position. So once again, I'm not just leaving the trade to run. I'm watching it. My stops are at break even, but I want to maximize my profits as much as possible. So I'm looking for a secondary position within the market. So as you can see, price is pulling down and forming that higher low. See what happens. We get a rejection of this previous level of resistance as support, and then I pull the trigger again. Now what I'm doing is, the only way I enter a scaling position is if my initial trade is at break even. So this way I'm potentially getting now a plus 7.5 like I said earlier, but I only have a 1% risk. So this trade has turned from a 1-to-3 to a potential 1-to-7 because I have moved my stop loss to break even on the first trade. So I'm maximizing on my position as it's going up. So yeah, anyway, let's continue this. I believe this just goes straight to take profit after this. At this point, okay, notice how we've now come into this level here and we're starting to see some kind of rejections. This trade, the second trade, is also at break even. So that trade is now running risk free. Both trades are running risk free. It's now in the market's hands. But also what I'm doing, which I'll put a screenshot in this video of how I set it into the VIP group, is I'm trailing my stop loss into profit as well. So I believe I was trailing my stops below this low point, and then as price was continuing higher, every single higher low that was being formed, I was just trailing my stops with price action, just in case price was to reverse. At least then I'm gaining something from the market if we see a sudden influx of sellers jumping in. But anyway, let's keep it going. Just continuously forming those higher highs. At this point, I've been tagged out of the market. Notice how price is beginning to kind of slow down as we're reaching this level within the market. Okay, so I'm out now, plus 7.5 risk to reward, great trade. But notice what happens as I continue. We're slowing down, and then sellers step into the market. Okay, so notice how we approach this level of resistance, influx of sellers, equilibrium taking place, 50-50 between buyers and sellers, and then sellers take control. So we've done well to get out of the market, and that was the highest point there. And as you can see, that wouldn't have reached my TP if my take profit was right at the top of that wick right there. Okay, so that's why I never target the top, because it's very rare sometimes that it actually reaches it. And if it does reach it, it would take a lot longer to get there, and you might get price pulling back. And for me, for the extra, what's that? 5 + 4, that's 9. For the extra 1.5%, in my opinion, I don't want to be involved in that trade, because if I play it out, it did eventually. See, look, you don't want to be in this trade when price is moving like this. You just want to get out. But I think what actually did happen, we did eventually break through. Yeah, so eventually it would have tapped the target, but I'd much rather get out here than have to go through all of this and potentially price pull all the way back before it reaches that level. I want to be in and out of the market as soon as possible. But anyway, that is the trade on EURJPY. We'll now go into another breakdown of another trade that I took during that period where I got that payout. Okay, so here we are on USDCAD. This is on a 5-minute time frame, and it was a trade taken on the 2nd of May. I'll put in the analysis that was sent into the group, and obviously the position as well at some point that we actually gained. So the analysis for this trade, really simple. So we saw a strong impulsive move to the upside here, followed by all of this market structure to the downside, which is a correction. Now, what tends to follow a bullish impulsive move followed by a bearish correction is another bullish continuation. Okay, so this is my position here, and originally I was going to be targeting this high up here, which would have been a massive risk to reward, like a 1 to 20, but managed to only get out for a 1 to 5. Still great, but this was due to a trailing stop loss, which tagged me out of the market. And as you'll see, it was the best thing to do because the market did just keep moving to the downside, which once again, like I said, it's important to manage your positions whilst you're in it. That way you're limiting losses and also maximizing on your potential rewards as well. So the analysis for this on the 5-minute time frame, I started to see evidence of a bullish reversal, and the first bit of evidence was price forming a inverse head and shoulders pattern, as you can see here. We've got the left shoulder, we've got the head, which actually lines up back into this area of support that we had. So that was the head, and then this is the right shoulder forming. Now my actual entry was on the 5-minute time frame, the 1-minute time frame. That was my entry signal. So we'll drop down now and show you guys how I actually took the position. So we're now on the 1-minute time frame, and this is the inverse head and shoulders pattern that we're seeing. We've got a nice double bottom down here, followed by this strong impulse to the upside, and then we're seeing this bearish correction back down. Now, one thing I did use for this trade in particular was the Fibonacci retracement tool. As you guys know, I like to use this as a confluence when it's fitted, when it's actually makes sense. It's not always going to be used. It's just in this scenario, it was used for this specific trade. So dragging the Fibonacci retracement tool from the swing low all the way to the swing high. And for this example, we can see how we pulled back to the 61.8. We saw a slowdown in momentum. If I just zoom in here, you can see how as we approach the 61.8, we started to see a few doji candles, which are indecision candles. It's basically the market slowing down, making a decision. And then once that decision is confirmed by the following candle, in this instance, we started to see buyers clearly step into the market. That is when I initiated the trade, okay, after that candle, once we started to see buyers step into the market. So I initiated the trade, and then we'll play out price and we will see what happened. Straight into profit. Now, how did I manage this position? Once price broke through this lower high point here, once we formed that new high point, I trailed my stop loss to break even. So my trade is now running risk-free. And then if I play it out, we started to form more structure. I started to trail my stop loss as price was increasing to the upside. So at this point, as you can see, when price broke through this high point here, we formed a new high. I put my stop loss below this low point here. So at that point, that would have been stops trail to a 1 to 2. So I am basically worst case scenario, if price was to pull back, I would gain +2 risk to reward, but I'm obviously still aiming for my original target. Now, I didn't get out of the trade. Remember, this is a trailing stop loss, so I'm still in the trade at this point. My initial take profit was all the way up there, as I previously mentioned. So I'm still in this trade. I'm still trailing my stop loss with price action as we're increasing to the upside. And then as you can see, price begins to consolidate at this zone, okay? So price is now consolidating. Reason being is because we are at this level of resistance within the market, okay? So price is just beginning to slow down because we've got into this level of resistance. And like I mentioned on my previous trade, when you get to these levels of resistances, you know, don't be alarmed if price starts to form like this. It just means that there is a decision being made in the market where buyers are closing their positions, sellers are entering the market. But because price is bullish, the probability is in the favor for price to continue moving higher. Hence why I stayed in this trade, and I'm looking for price to break this high, and then I will continue to trail my stop loss into profit just in case we do get a sudden influx of sellers jumping into the market. I can get out in profits. So I believe we did then get the break. Okay, guys, so that is the break that we had within the market there. And then that's when I trailed my stop loss to this, because as you can see, this low point where price wicked, I trailed my stops to just under there. So my stop loss is now trailed to a 1 to 5, meaning if price reverses, I am getting out of the market at a 1 to 5. At this point, I'm expecting price to continue moving higher. We formed a new higher high in the market. Price has pulled back, formed a higher low. I'm expecting price to continue, but I'm trailing my stops just in case price doesn't continue. Then, as you can see what happens, I do get tapped out of the market. +5 risk to reward banked. I'll put the trade screenshot of what I banked in here. And as you can see, I done well to get out of this trade where I did, because if I continue, you can see that now price is back in bearish market structure. And if I didn't get out where I did, I would have gained practically nothing from this trade. And that's why I managed the position how I do. So whatever happens in the market, because at the end of the day, we don't know what's going to happen, I am almost guaranteeing myself something. When I'm in profit, I can guarantee that I control my stop loss, so I can guarantee that risk to reward ratio that I want. So anyway, guys, that is 2 trades broken down that brought me into nice profits on my funding pips account. The EURJPY trade, this USDCAD trade. There was obviously other trades involved, many other trades, winning trades, losers, but I wanted to specifically focus on this because I felt that it had the nice trade management and how I manage my position. That's what I want you to be able to take away from this video, is the trade management, scaling into second positions to maximize on your profits. But yeah, guys, that is it. That's the end of the video. I hope you enjoyed it. Make sure you hit the subscribe button so you don't miss any content. Let me know in the comment section what videos you want to see. I'm going to start filming more vlog style videos, more educational videos for you guys. But yeah, that's the end of the video, guys. I hope you enjoyed it, and take care. I'll see you in the next video.